Hi, subscribers of the Montana Real Estate Channel. Today we're going to be doing a little in-house, a little in-studio interview with Rob Childs with Sapphire Rental Management.
Yep, that's correct.
And so we're going to be talking about rentals in the Bitterroot Valley. It might be something that you're interested in if you're kind of looking into the possibility of moving into this particular area in the Bitterroot. I'm Craig Cyphers, and of course I work with my daughter Erica at Cyphers Family Real Estate, and we've been helping folks move into and around the state of Montana since 1966, and we'd like to be a resource for you. So if you get a chance, tap that logo down there on the right-hand corner of your screen so you're notified whenever we come out with a new video about communities, price points, landscapes, culture, lifestyle, and all things real estate within the state of Montana. So Rob, today, let's just talk about the current state of rentals in Ravalli County.
You bet. Yeah.
So what are you seeing out there?
So we are strictly on the rental side. So we don't buy or sell real estate, as you know.
Right.
And so we've been in the business for about 11 years now. And so grew the business from zero up to where we are now, managing a pretty big portfolio of residential. And a lot of what we do is single family residential, but we do some multifamily, some commercial. We do a little of everything. We do some short-term rentals. And so we've been around for long enough to see some of the trends that have impacted our market pretty dramatically.
Right.
Of course, survived through COVID like everyone else, and then saw what that did to housing. And then on the back end of that, there's, through COVID and post-COVID, we've just seen a lot of interest in the area, a lot of people moving to the area, kind of quote unquote discovering it, and people being able to do more remote work that are looking for an improved quality of life, making an exodus from urban population centers to areas like ours that are quite bucolic and quite ag or traditionally ag centered, but of course more and more development happening along those fronts. But we've seen a lot of people interested in the market for retirement purposes, and then just remote work and improving the quality of life. And then, of course, just folks that are already native to Montana that are moving around, coming here for work, that type of thing.
Sure.
We've seen a pretty big growth in the employment in the major employers. They've added a lot of jobs these past several years, and so that's driven a lot of influx in population too.
What are you seeing in terms of the inventory and the availability of rentals? Pretty tight. This is what we hear.
Yeah, absolutely. And I can talk about that anecdotally, but also have some numbers too to speak to that. But yeah, I mean the general trend for sure is a housing crunch and a real misalignment between supply and demand. And the past through COVID, even before COVID, honestly, I'd say 2017, 18 through 2023, we've been in that same dynamic where there's just not enough housing for the demand. And so one of the consequences, of course, is rent prices have just continually marched up quite a bit faster than inflation, quite a bit faster than you would expect per the inflation measures. And we know the past couple of years, inflation has gone up really fast too.
Right.
So it's been tough, and we've been in, for our office, we've just had an easy time getting properties rented. But it's painful because we'll list a property and we know that, okay, this is on the high end of what could be, considered reasonable here. But that's where the market is. And then we just get bombarded with interest, a lot of phone calls, a lot of emails, a lot of applications. And then we're faced with the dilemma of, okay, we've got multiple applicants, multiple of those of which are well qualified, and we have to select one person.
Yeah.
And so that's tough. It's tough on everybody, on us, on the applicants.
Right.
You know, someone's going to come away a winner and they're going to be real happy.
Right.
And it's fun for us to be able to give people the good news, but of course we have to give out a lot of bad news.
Right.
And that stings. And
what do you think you see in terms, let's say a typical rental, a 2-bedroom, 1-bath, and what are we seeing in the valley would be kind of a range of rent for something like that?
Sure. So if you're looking at like an apartment scenario, like a 2-bedroom, 1-bath,
right.
Currently you're, depending on the amenities, you're in the probably like the $1,100 to $1,400 a month range.
Okay.
For a pretty small 2-bed, 1-bath.
And how many applicants might you get for something like that?
Over the summer, we would definitely, within a week, we'd probably have a half dozen applicants and something like that. Yeah. And then more of like the bread and butter 3-bed, 2-bath, 2-car garage type of home.
Right.
We manage a lot of those, more so of those than we do apartments. And those are really more in the like $1,800 to $2,200 a month range.
Okay.
And same deal. They're very appealing. There's a lot of people looking for that type of home. So probably in the same range of applicants for a property like that over the summer. Right now, in the kind of shoulder season and headed into winter, we've actually seen a vacancy rate for the first time in a long time. Yeah.
Okay.
Which I consider very healthy. It's good to see.
What do you attribute that to?
Two things. One, there's a bunch of new doors that have hit the market. New builds.
Okay.
Yep. So there's been some infill within Hamilton. There's been a few multifamily projects, and then there's been investors that have put properties in, just single doors in here and there as well. And so just per our office in, let's see, it was September. In September, we brought on 10 new doors, all of which were new builds.
New builds?
Yeah, and I know our competitors.
Now, were those
brought some on
duplexes or
too.
multifamily, or what were those?
They were a mix.
Okay.
Yeah, so we had one developer that did 5 single families, but they were kind of like tract housing all lined up in a row.
Sure.
And then we had one owner that did some infill, so they put in 2 accessory dwelling units behind their property in Hamilton. Then we had one that did a duplex, and then we picked up a couple single family new builds.
That's sort of like you say, a mix.
Yeah, and I know too that our competitors picked up some of those, and then there were some owners that just are trying to rent them out themselves with some new doors too. And so the reality is, when you get that many new doors hit the market in a short period of time, you know, I think one of the driving factors that you always have to remember in our market is it's a small market. It's a small town. And so when you have a lot of doors hit, our absorption rate is really low for our market because it is so small, especially when it's not in the main summer season. So with a low absorption rate and a lot of doors hitting all at once, all of a sudden people have options. And so it was interesting to see the impact of that. So all the new doors that the owners of these properties, like, they all wanted to list for top dollar, and justifiably so. They're new builds. It's expensive to build, right? They got to justify their investment. And then we saw people all of a sudden getting real picky on price because there were options. Yep. And
where is your market? I mean, you handle stuff in Darby, for example?
We try to stay out of Darby.
Okay.
It's almost like its own market. It's completely different from the rest. So we'll go south of Hamilton all the way up into Lolo.
Okay.
And we do some limited stuff in Missoula as well.
Oh, I see.
Yeah.
Okay.
We used to be more involved there, but decided to retrench and kind of pull back and really just focus on the Bitterroot.
Okay.
Yeah.
And when somebody goes into a property, are you seeing like things like first and last and the sizable security deposit? What kind of dollars are we looking at in order to get into a place?
So to get into a place, the way we're set up is we typically will charge the equivalent of 1 month's rent for a security deposit, and that's pretty normal. People do different things than that. There's no law that really governs what you can charge for a security deposit, but that's what I would consider normal. That's what most people will do. And then if there's a pet involved, then we'll take an additional pet deposit. We're set up to do $400 per pet for deposit. Pet rent is becoming really normal. So, it used to be kind of a foreign concept, but more and more it's just almost expected by folks with a pet. because they know it's harder to get in when they have a pet. And
Right.
owners know that, and they're like, well, to offset my risk, I want a little extra assurance. So,
Sure.
so pet rent comes into play. So to get in, if you're looking at just say a 3-bed, 2-bath for $2,000 a month, you got to pay rent in advance. So that's prorated depending on the day you move in. So say you move in on the 1st, that's $2,000. And then you've got to pay the security deposit of $2,000. And then application fees range pretty widely. Ours, we try really hard to keep ours low because we know that they sting, and people are out applying to multiple companies. So we keep ours at $35. We've been at $35 for a long time, and we actually lose money on our applications.
Okay.
But we're okay with that. I know in Missoula, I've heard of people charging north of $80 for an application fee. So it gets nutty.
Yeah.
Yeah, and if you have, two, a mom and a dad and maybe an 18-year-old, like multiply that out by.
So for each resident,
Mhm.
we'll have an application fee.
Anyone over 18.
Anyone over 18?
Yep.
Okay.
Yep. So I mean, to get into a $2,000 a month rental, be prepared to spend $4,500 up to maybe even $5,000 if you have a pet.
Right.
Yeah.
Now, are you seeing like 6-month, 1-year leases or month to month? What's most common, or is it across the board?
Yeah, most common is a year lease.
Okay.
Yeah, that's most of our owners are long-term property owners. They're not really interested in doing anything else with their property. So they're like, hey, we just want something stable.
Mm-hmm.
And so a year lease is good assurance for them, and it gives the tenants confidence that, okay, I've got this place secured. And then once the year comes up, we always get with owners and tenants for renewal to keep them in a stable situation. But again, there's no law about that. If we do have an owner that's like, I want to keep my options open, then we can do a month-to-month lease. And then if we have a tenant that wants something shorter term, we can do month-to-month leases as well.
Yeah.
We just property by property.
What in terms of, let's say, for example, I've got a 1-year lease,
Mm-hmm.
and I'm looking to buy a house, and I find something I like. What do you see from your end in terms of getting out of those leases?
Mm-hmm.
Does it? I mean, with the market as tight as it is, it would seem like it would be easy enough to replace those people. But
Mm-hmm.
what are you seeing?
Yeah, great question. So we do have break lease provisions built into our lease, and there's always a stipulation in there that you can be held responsible for lost rents. So if someone breaks their lease and we have a hard time filling that property,
Yeah.
then they can be on the hook for that.
Gotcha.
But we try really hard not to pursue people for that. And one way we do that is we just market aggressively. And with a market like it is, we're usually successful in just lining up another tenant, getting them in, and then the liability's gone for the person that's moved out. Because we get it, life doesn't happen in 12-month increments.
Right.
If we have someone that signs a 12-month lease and then 3 months later they're gone, like we're going to be a little more upset than if we had someone in there for 4 years and then in month 6 of their 12-month lease they have to move.
Right.
So we always try and help and give people the benefit of the doubt. There is a cost associated with property turnover, with vacancy, and so we have to be fair to our owners.
Right.
So we're always just trying to mitigate on both sides, help the tenants out, acknowledge, if they've been great tenants and they've been above board on everything, they've given us notice, we're going to take care of them. And then we, of course, protecting the interests of our owners. So, there's a balance there, and
Sure.
Over the years we've gotten pretty effective at striking it, but, sometimes it's not perfect, and so that can create difficult situations depending on the situation.
Right.
Yeah.
Now, let's say, for example, somebody's coming in from out of state.
Mm-hmm.
You can do all of this online, pretty much.
Yeah.
The only thing is you're not viewing the property.
Mm-hmm.
For us in the sales end of it, a lot of the selling agents get concerned about them not seeing the property.
Yeah.
What happens with the rental market, and what have you experienced?
Yeah, good question. So we run into that a lot because we market really aggressively online, and so we do pull a lot of interest from out-of-state people looking to move into the area. And oh man, we've had some experiences for sure where someone's all gung-ho on a property, and we get them locked in, they sign the whole deposit, they move here, we sign the lease, and they move in, and they're like, this isn't what it was represented. and then we have someone who's upset. And so anyway, we have a policy we put in place a long time ago where we will not sign a lease with someone without either someone representing them seeing the property in person or just doing a virtual showing.
Sure.
And so we do a fair amount of virtual showings, and that way, hey, even if they can't be there boots on the ground, they can still pipe in and see it firsthand, and they can't arrive and say, this isn't what I was expecting.
Right.
So we're really careful about that, because we, early on in our early days, we did have some not fun experiences with those scenarios.
Sure.
Yeah. And I guess buying a property versus renting, there's a degree of finality for purchasing that you do not have to worry about with regard to renting, but still, housing is housing, and it's one of those critical needs. And so it is important that that we eliminate surprises. That's our focus.
Yeah. I've actually had some pretty good luck, but have been out with people and have a good idea of what they're looking for, and have been able to sell them sight unseen. Not too often. It makes a person nervous, that's for sure.
Yeah.
All right, here's the big question. What happened with Yellowstone and how and the amount of rental space that they took?
Yeah, that's a great question. So definitely there's an impact. We got, from the onset of filming, and when it really became well known that, hey, they're here, they're filming, and there's a lot of people associated with that production that are going to be in the area, we got so many calls from property owners saying, hey, I want to convert my property into a furnished rental. And my goodness, so many phone calls.
Yeah.
And we do manage furnished rentals, and so we have a real good idea of what the return on investment is for those.
Right.
And so we know that there was this big, huge market push to move that direction, and a lot of people did it, and we helped a few people do it. But I know a lot of other people that we turned down pursued that and did it. And so as soon as a property becomes a furnished short-term rental, it is no longer available for someone that just lives and works here.
Right.
And so that hurts.
Yeah.
So definitely the number of properties available to rent long-term, unfurnished, conventional went down. And I think it went down, I don't have a number,
right,
but it went down enough to matter in our small market.
Interesting.
Absolutely, it did.
I kind of wondered about it. I know in terms of the sale end of it, a lot of people said, oh, the market blew up because of Yellowstone. Well, I don't know that I buy that in terms of the sale of it. I'm sure there are a few people that saw the area and its unique and intrinsic beauty that might not have otherwise looked at it, but it's just hard for me to imagine that it would have had that large an impact. But I kind of sense that was the case in the rental market, and in particular, like you mentioned, the short term where it's all furnished.
Yeah.
Well, Rob, I can't. Is there something else that you'd like to impart on our viewers and subscribers with regard to the possibility of renting a property or leasing a property in the valley?
Yeah, I guess just in general, it's a great time to be a property owner in the valley. Rents are pretty high, and return on investment is definitely solid as long as you're getting in at the right level. And then for renters, I think moving from this point and moving forward, there is going to be a higher vacancy rate. I know there's some pretty big projects that are scheduled, some have broken ground already, and new doors are coming into the market, and it's going to really ease the pain for some of our big employers who have people turning down contracts who aren't moving here because of lack of housing.
Right.
And one of the effects of that is, the more availability, the more choice we have, the less picky a homeowner can be, and the less they're going to be able to just dictate terms.
Right.
And so, it's still a good market for investment properties, but it's also becoming a little easier on the renters side of things, which is huge. We have not had that happen in a number of years.
Right.
Yeah.
What do you have a sense? And I've got, working with some investors that I've worked with, like say for example, single family. We take a look at those returns in terms of a capitalization rate, and I'm having a hard time seeing in most cases, even if well purchased, having a cap rate of much more than about 3.5%. What do
Yeah.
you see?
I totally agree. In residential, if you can hit 4%, then you're doing pretty darn good.
Right.
And that's what I see too. It's like three, and then 3.5, maybe 4. And that's about it. So most of what we're seeing for like investors buying stuff up is more of like 1031 exchange. Like, okay, we got to put our money somewhere.
Yeah.
And so we're going to accept a low cap rate and we're in it for the long term, that type of thing. But commercial's different. You know, commercials, man, like there's a lot of commercial opportunities depending on what you're looking for and, you know, what you want to do with those properties. But of course, the risk of the commercial is different too. So.
Yeah. Well, and I've spent a lot of time in that commercial space, and it's so much different in the valley here in Bitterroot than it is, for example, in Missoula.
Yeah.
And then the stuff that I've seen around the state, like for example in Billings and Bozeman, and those areas are just an incredible difference. Well, Rob, thanks a million.
You bet.
We appreciate your time very much, and think about Sapphire Property Management. You guys, it's online. What is your web address?
Yeah, no, thanks for asking. So our full business name is Real Property Management Sapphire.
Right.
And yeah, we're well known as Sapphire Property Management. Our web address is rpmsapphire.com. We're easy to find. We've got a nice office here right on First Street, the big sign. So anybody that's interested is welcome to visit our website, and you'll be directed from there.
Yeah, and think about it from a property owner standpoint. If you need somebody to manage your property, Rob's the guy. And appreciate your time.
Yeah, you bet. Thanks for the opportunity. It's really fun.
Well,
That's what you do.
We'll see you on the next video on the Montana Real Estate Channel, brought to you by Cyphers Family Real Estate. Cyphers Family Real Estate since 1966.